following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the January 21st wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes. I hope that you're off to a terrific start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary, actually a wonderful Wednesday, an extraordinary Wednesday as well. Of course, the easiest way to do that is to always remember what's dreamed about. Well, what's talked about is a dream. What is envisioned is exciting. Of course, what is planned becomes possible. But here's the thing, what's scheduled, that's real. And I want to thank you for scheduling your time with me here this morning. I'm absolutely here to serve you. Our call number is 877-927-6648. Internationally, you can pick up that phone and dial on in at 727-445-1044. Remember, if you've got a question, I promise you somebody else has got that exact same question. So don't call in for me. Don't call in for yourself. Call in for somebody else. A random act of kindness. That is the way you like to live each of your days out there. This is Wonderful Wednesday. Of course, it is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. We got markets that are bouncing all around out here. Dow's off 42 points. I won't say entirely led by IBM, but IBM putting some of that huge weight into the Dow, being off 42 points. The S&P is up 1.5 points out here. The composite's up a couple points. Russell 2000 up a couple of points out here. Gold is now, it's flat. It's trading up at $12.94. Silver's up 22 cents at $18.18. That's with the U.S. dollar index off 70 cents right now, down 694 ticks. We're seeing some movement inside of the euro. I believe Mario Draghi floating some feelers out there with regard to what his plans for QE are. You've got light sweet crude up $1.17, trading out at 47.62. We didn't get to finish up with our last caller. That was Pat in Framingham, Massachusetts. I believe it was Framingham. Is it not Framingham? Wasn't Farmington. Yeah, Framingham, Massachusetts. And she had asked about Goldfields and Agnico Eagle, AEM. So here's what we're going to start off taking a look at gold, trading out at $12.94. Let's take a look at a couple different things that we know that are going on with gold. So first, with regard to its price right now, trading out at the $12.95 level. What else is in this $12.95 level? Number one, you've got a natural area where people are going to get off of an elevator. If you just simply take a look at retracement levels, that's coming from the retracement high of July 10th out here, that high at 1347, down to the low that was put in on November the 7th, and that price point low was 1132. From high to low, the 0.786 retracement level is at 1301. So that's a, just typically people will get off different elevators. That's when we take a look at this Fibonacci expansion retracement numbers out here. That's where you typically see people lighten off on positions, maybe even add to a position. In this case here, the candle that's formed so far with gold being flat, well, yeah, it's a doji, but we're a long way from gold closing out here. We just know that we've hit a resistance level. That's all that we've seen. We've seen no reversal or anything along those lines. We have seen price also make a 1 to 1.272 A to B equals CD. We can take a look at the bottom portion of my chart out here. There we can see that gold in its using its 14-period relative strength indicator. It's in the overbought condition. So everything just kind of makes sense that gold is doing, in essence, what it's doing, regardless of what is going on inside the U.S. dollar index. Remember, that correlation has basically come unglued. So I think you got to trade one chart at a time out here, because we've seen the U.S. dollar index moving higher, and we've seen gold moving higher out here. Those correlations, to me, it doesn't mean a whole lot out there. So instead, let's just trade the patterns that we're looking at. So in essence, you actually have a Gartley sell pattern. You have a potential Gartley sell pattern. The word potential is very important to make sure that you add to that. You've got a 0.786 retracement, a completion of a 1 to 1.272 A to B equals CD. So it says you've got to be on the lookout out here. At this stage of the game, at 10:11, not really that big of a deal as we speak right now. And it looks to me more like what we should see is gold move up to the 1340, 1347 level. Now, why is that important? If I'm going to answer Pat's question from Framingham, well, it's important because the correlation that does work out here that you want to be paying attention to is this correlation. This correlation is the gold contract is on the top portion of my screen, and the GDX, which is the market vectors gold miners trust, is on the bottom of the screen. And, you know, if the entire sector starts to go, even if you got a good stock out there, you know, it too will get hit. So we can see that this correlation is in place. So that's why it's so important to go say, hey, what's going on with regard to gold, even if you start to see some kind of pullback in some of the mining equities out here. Okay, so that's the correlation. It's in place. It's clearly in place. If we were to add the U.S. dollar index, I'll go ahead and do that for you. So give me a moment here. Let's add a symbol. Where is it? Add symbol. It's right in front of me. Insert symbol. There we go. Insert symbol. Let's go ahead. We'll put the U.S. dollar index, DX. I'm going to put the continuous contract out here. Is that what I have to do? I can't remember if that's what I have to do or not. I don't think I do it. DX pound sign F times -1. Now we're going to do that. I don't want this to be a bar chart. I want this to be a line chart out here. Let's see. Okay, -1 because I want to invert it. I want to invert it here so that it shows that when the U.S. dollar index is getting stronger, okay, it should basically follow along the path of gold out here. So that's the bottom portion of my screen out here. So as it's getting, this indicates the U.S. dollar index getting stronger. And at this stage here, you can see ain't no correlation. You know, I know ain't's not really a good word out there, not even really a word. And we can see that it has not been, there's been no correlation. So today, to jump all over the idea that, hey, the U.S. dollar index is moving lower and now that gold should take off topside, I'm saying if you look at the charts here, there hasn't been a correlation for quite a while. So why would we all of a sudden pick today as a day to go ahead and begin that correlation? I say, nah, you don't want to do that. Instead, you just want to focus on the gold chart and you want to focus on the GDX. Now, back to AEM, which was the specific question. So if we go take a look at what AEM is doing, and now if you get a bearish reversal signal inside of gold, that's a whole different story, but we don't have that as we speak right now. If we take a look at AEM, it's got 1 million shares that is traded. It's down 85 cents out here. Oh, there's one other thing I want to show you, and that's this. That's the XAU, because I want to do one other thing and show you that what we're seeing at this stage of the game is to be expected. Why? Yesterday we took a look at this descending price channel inside of the XAU. So we can see that this is a descending price channel taken us back in September of 2012. So we got several years worth of data out here, and we can see that price here ran right into resistance, or very close to resistance, the top of this descending price channel. What you're looking for, anyone that is long the mining equities out here, you're really looking for this to be broken through. The HUI actually broke through its a couple of trading sessions ago, but the XAU has not. So you don't have a confirming signal in both of these indexes out here. So with gold running into some resistance, with seeing some mining equities pull back, it's not to be unexpected based upon what we see here. But the key is going to be, what's the candle configuration for today? Now, okay, let's go back to the ranch. And the ranch out here, in this case, is going to be, take a look at AEM. So as we take a look at AEM, as I said, it's down about 84 cents. Let's take a look at it. What is its message? Well, if we take a look at its retracement from the high out here on July 29th down to the, and there's no way to really evaluate a stock unless you look at all this data and try to put all this together out there. I know you'd just like one concrete, clear answer, but we want to be able to, the market gives us clues, and so it's really our responsibility, both yours and mine, to go take a look at those clues to then determine what kind of action you're going to take, if any. So if we go from that swing point high down to the swing point low back here on December the 17th, price has made it almost up to the 0.618 retracement level. So a little bit weaker than gold, having made its 0.786. Nonetheless, 34.48 was its 0.618 retracement level. Remember, we use these as guidelines, just like Barbosa in Pirates of the Caribbean. Now, yesterday's candle pretty close to qualifying as a doji style candle out there, either a doji or a bit of a high wave candle. Either of them, the meaning of both in this case here, mean that gold may have lost its way. So, are you you're just seeing a natural, I think you're seeing a natural pullback. Now let's just kind of resort down to volume out here. So far today, The pullback is on 1 million shares. 2 trading sessions ago, as Agnico Eagle was moving higher, it did it with 5.5 million shares. We've been trading for less than an hour. Volume is relatively high. Let's go see what's going on from a volume standpoint. Let's just put this on a 5-minute chart out here, see what kind of volume we can actually see out here, see if volume is expanding or if it is kind of sliding. It's really not expanding at this stage of the game that I would see, not really totally picking up. So now we just got to go back. Let's go back to the daily chart. Let's look for some potential retracement levels, or what it is that you would be watching. Now, what I don't know in Pat's case, the great news is Pat uses stops, so that's a wonderful thing. So if you've got a stop, and we were taking a look at the stops with regard to GFI, let's take a look at the we were using the 13-period exponential moving average. So let's go ahead and add that one to my chart out here. So that happens to be the white line, the other white line that just showed up on my chart out here. Let me get rid of the retracement. So let's get rid of that retracement out here. There we go. So now if we take a look at where the 13-period exponential moving average is, that's at 29.95. This is trading at 31.90. I don't even know what the average true range is on this equity, but it's probably at least 29. 128. There's at least a couple of bucks out there. And that means that from a stop standpoint, you don't want to do anything average in life. And you don't want to have, here's the deal, we're in volatile markets, so I want to make sure that I share this with you. Most people have a belief, and I have a belief that in volatile markets, you want to use tight stops. I, on the other hand, one of my favorite comedians, what's that guy's name? Lewis Black out there. I wish I could do the thing that he does. That is the exact opposite of the way that it really works out there. You see, if you're trading something, you have belief in what it is that you are trading. You know, you've got the right pattern that is in place out there. On a volatile marketplace, you need to have wider stops, because you can be right on the trade. You got to understand what your trading plan is, but you can be right on the trade. I don't know if this has ever happened to any of you out here, where you say, okay, I've got this trade, but I'm going to go ahead and use a tight stop. I'm going to use a tight stop, and only to have gotten stopped out, yet to have been right by the end of the day. Do you want to know why you were right all along, except for using that tight stop? Because all that the market did was move inside its average daily range out there, average true range. In a volatile market, you need to use wider stops. That means don't even use what the average true range. Just take a look at the 10 days average over from high to low. Account for gaps out there over the last 10 days, divide it by 10. That's going to give you average. And I say multiply it times 1.272 or 1.618, something like that. If that stop is too wide for you, and it can never be too wide, because you see, what stops do is they just help you identify your position size. Before you enter a trade, every trade that you trade out there, you shouldn't trade more than 1% of your risk. You shouldn't have more than 1% of your risk. But if you want to do more than 1%, 1.5%, 2%, okay, so be it. But whatever your risk is. But if, for example, on a $100,000 account balance, all right, 1% says that you're going to risk $1,000. If your stop is $2, okay, that says that you take $1,000 divided by 2, you could buy 500 shares of whatever that is. That's all that does. If your stop was $4, okay, and it was $1,000, that says, oh, geez, maybe $5. Let's use $5 stop out there. A little bit easier for me to divide. Then you're looking at 200 shares. All that using a wider stop does is adjust your position size out there. Your risk was always your risk. In this case, $1,000 out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is just slightly negative. That's with IBM being off about $5 this morning. S&P is up 5, Composites up 9, Russell 2000 up $1.80. So just to finish off, Agnico Eagle for Pat out here, you know, you're using stops, and that was really a compliment to you, so that everybody else, I just want everybody else to listen to what Pat was doing. I did want to certainly add in there that with regard to volatile markets, use wider stops. It's the counterintuitive thing, but use wider stops, not tighter stops. I don't want you to be right on the trade and wrong on the stop, which really just meant that you were really wrong on the position size. It's the numbers game out here, and I want you to make sure that you use those to your advantage out here. here. So if you see it close below that 13-period EMA on Agnico Eagle, you're likely looking at a pull back to 29.25, 26.34, somewhere right around there. Right now it's trading out at $32.33. Let's go take a look at the rest of the market. Now the big move out here so far this morning, I would have to say, is inside of the euro. So let's go take a look at the euro, see what it is that we can figure out here. The question is going to be, and I posed this question on Friday. I just posed it as a question inside of the Tiger's Den to both Tom and David when they were doing the 4 o'clock show, 4 to 5 on Friday, is that when we take a look at stock chart patterns out here, weekly patterns inside the euro suggest a move lower. In fact, let's put the weekly chart out here. So let's do that. We'll put the euro currency pair and see if I can get that A there. So the A to B equals CD to the downside takes us to a price projection of about $1.10. Now, the blue line going across my screen at the $1.16 level, that happens to be a fairly key swing point. And we're trading right now, in essence, right on it. 116.39, we're trading at 116.42. So closing back above that would be a rejection of a swing point, even though we closed below that yesterday. But the preponderance of evidence here, as we speak right now, still suggests that we see the euro spike down to $1.11. Okay, but what else can we anticipate out here? We know, number one, the euro tends to make a significant swing point higher or low towards the end of January, early part of February. It has for many, many years out there. Sometimes they're short-lived, meaning for 8 weeks, something like that. Sometimes they're long-lived out there. So we know that the market's been moving lower. There's no chance it's going to make a swing point high. So that much we're clear about. If, how much of the euro moving lower has been a result of, which I don't know, has been a result of anticipation of whatever Mario Draghi is going to do. Now, this is a guy that has never been able to step up to the bar and actually pull off what it is that he's been able to say in words out there. So there's a pretty darn good chance that he's going to fall short of what the market was expecting. So if what was built in to the drop in the euro here was that he was just going to totally roll out the printing presses and he's going to fall short, what you ought to see then is you ought to see the euro make a bottom. You ought to see the euro make a bottom and not even get down to that 110 area. Maybe it's some kind of huge spike, although that would be one heck of a spike, intraday spike tomorrow. I don't know. The chart is absolutely still bearish, especially when you take a look at the weekly. The daily continues to work itself out of an oversold condition out here. And really, I would say you step aside on this trade is really what I'm saying. I would step aside on this trade. And then play it from there. If we see the market, if you were to see the euro bounce, then wait for that first pullback or something along those lines. But I think that standing in front of this freight train, the weekly chart says lower price. The daily chart says, hey, it's just really kind of moving sideways, even though it's been trying to create a couple of these bullish candles out here. Just been working off an sold condition out here, which tends to be more bearish. So the daily's kind of also suggesting what the weekly chart is showing us at the moment. So that's what's going on inside the euro. But that's been the big mover that has obviously put the weakness inside the U.S. dollar index. And, gold's trading off $7 right now. It's actually not that unusual. What I have noticed is that when the U.S. dollar index and gold decouple, which they clearly have, that the actual first move when the U.S. dollar index gets weaker as gold actually pulls back. So what it's really doing this morning, go take a look at it yourself. Go put a correlation of the U.S. dollar index on your chart along with gold. And then go take a look at the time periods where the two of them diverge. Specifically, the time period where we're taking a look at right now where gold goes up and the U.S. dollar index goes up. And what you will notice is there is also an uncanny pattern there, is that first move down inside the U.S. dollar index, counterintuitive to what one would think, you will also see a move lower inside of gold out there. It is consistent. There aren't that many times where the two come uncoupled, but if you go do that work, you're going to see what I've seen out there. So what you're seeing out here is not unusual with regard to today's action. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 7 points right now. That's in the. Of course, it's been flying all around here this morning. But the Dow's up just a tad. S&P is up 6 points. The Nasdaq's up 8. Russell's up 1.5 points out here. NDX is up 7 points as well. So what do we want to take a look? I'll show you. We'll take a look at next out here. So really two things to watch. Right now, the New York Stock Exchange has 854 net advancing issues. 840 is the actual number. Anything above 840 and the summation index for the New York Stock Exchange turns positive. Hey, unfortunately, the market doesn't close at 10:34. It closes at 4. So, but if at 4 o'clock, New York Stock Exchange is up 40 points right now. Let's just make an assumption if it's up about 40 points at the end of the day, then probably we have somewhere very close to that 840 net advancing issue. So if it's well above 40 points at the end of the day, a pretty good chance that the New York Stock Exchange would just switch to a bullish mode out there. And that would be very positive because that's a market breadth out there. So I don't know how it's going to end the day. I just know the number that you ought to be watching. From an intraday basis, I would say the number that is most worthwhile to watch is going to be the 200 period exponential moving average on the 120-minute chart for the ES mini out here. That 200 period exponential moving average has acted as resistance over the course of the last couple of days. Yesterday, price got up at between the 8 and 10 a.m. session. Got up and tested. That's the black little squiggly line going across my screen out here. That level was tested, by the way, during that little bounce between so that we've seen here, right? Between 8 and 10 in the morning. This morning, you saw price get up to a high of 2,024 and a quarter. That happened around 2,000. By the way, 2,024 and a quarter basically was the 200-period exponential moving average. So any close above that, I would really call it, since you've got a TAS market profile, resistance level just above that, 2,026.50. Any close above 2,026.50 bodes well for the S&P futures out there as well. So that's what I would be paying attention to on maybe a little bit shorter term chart out here. So again, 2026, we're in that session, that 2-hour session that ends in an hour and 24 minutes out there. That's what's good. That's what I would be paying attention to. Let's go look at the VIX index out here. Let's go see what it is doing today. Right now, trading 1981, well away from its 50-day exponential moving average at 1739 out there. That will be the triple confirmation if the VIX index closes below its 50-day exponential moving average. Not necessarily today. I don't expect that to occur today. That doesn't mean it can't. And if it does occur today, then expect the market to sell off within the next 48 hours, at least an intraday sell-off, because it would be too large of a move at one point in the time out here. But a continual move back, or once you see it below the 50-day, then the market will be in, there will be enough liquidity. I know people refer to it as the fear gauge out here. And the problem that I have with that is I never was able to figure out how to trade it. When I understood and applied different moving averages to the actual VIX index, that's when I determined that the 50-day was the most consistent moving average along the VIX, and that when price was below it, the markets did one of two things: either move sideways or higher. They never moved lower out there. I can't say never. You can have one of those anomaly days out there, but for the preponderance of evidence for the last many years has shown that when price is below that, it doesn't really matter where it's priced at. Just simply price being below the 50-day exponential moving average, the market either moves sideways or higher, but not lower out there. And so that says if you see that and you're short the market, you've got to say, why? Why? Because it's a pattern that works so well out here. So that's just one pattern with inside the VIX. So 1739 is going to be important for us to watch over, the next number of days out here. And now the reason I say that is because if you didn't catch the first hour of the show, yes, the market's got some resistance. I believe the market, as you know, I believe the market is forming a bottom. It's either formed it or it is in the process of forming it. I'm saying at this stage here it actually formed it, but I'm waiting for additional confirmations. Those additional confirmations are things like the New York Stock Exchange going ahead and actually turning positive out there. So that's why it's going to be so important. Everybody's going to focus on the Dow and IBM and so on and so forth. Don't focus on the New York Stock Exchange. If we see the summation index get above zero out there, that'll be really darn bullish out here inside of the markets. We're not there yet. The interest session, we were just a few minutes ago. We're not there yet, but we're getting pretty close. And if we get pretty close, could just simply be the initiation of a move higher, up at least into the highs here of December, but I would suggest that we would have seen the low for the year, or at least until, I'd say I'd say at least until July. How about that? Inside of the markets out here. So again, I don't know if we've already seen it, but we're in the process of building that. And the world markets are the ones that are actually giving us big confirmation of that. Let's just what's the DAX actually doing right now? Let's go take a look and see what the DAX is. Where's the DAX at? The DAX is back 10 points. No big deal inside of the DAX. See, the FTSE is really actually very strong here this morning, up a little over 1% as we speak. But the DAX here, if we take a look at this, and we'll go take a look at the ETF structures. Let's go do that for you as well, the index ETFs. But the DAX here is in full-blown bullish mode. Broke above a resistance level, did that a few trading sessions ago, did it with a wide-ranging bar. Steve-O doesn't even need volume in this case here. You can just take a look at the bars are communicating to you the strength that is out here. So until the DAX gets below the June 10th high at 10,033.74, it's in full-out bullish mode. It's in the process of making an A to B equals CD to the upside. And the FTSE is, as I said, is strong here this morning. It's got another little bit less than an hour, I believe, of trading. The FTSE is up 1%. It's up 70 points. That's strong. She's passing a B point with conviction, at least bar-wise. So it's running a nice bar tab out here. It's up above the B point of 66.52. That was from December 29th. Now, what's key about December 29th inside of the FTSE, which is a weaker of the indices out here, what's cool about that is, remember, our markets made their highs right around that same time period. If you look at the S&P 500, its actual high out here came in on the trading session of December 29th. Huh. How did that actually work out there? Yes. So so at this stage of the game, you've got the it just simply seems to me to bode well for the markets overall out here. But we'll know by taking a look at the New York. We'll use the New York Stock Exchange as our guide out here. Now let's go take a look at what's going on inside of the index ETFs out here. As we take a look at them, you've got the QQQ. Let's start off with the Qs out here, up 10 cents, trading out at 101.72 as we speak. So the key here for us inside the Qs is going to be price being able to get above this descending price channel. It's been in place in essence since December the 29th out there. So if the FTSE can do it, I see no reason why our markets can't do it out here. Of course, we are the leader. So if we're gonna lead, and we're gonna lead on the way down, then it won't be able to break this descending price channel. However, if we do see it close above this descending price channel, that would be a fairly good bullish message out here. That's what's going on inside of the Qs. Where is that today, by the way? You'd have to say right around 102.50 or so, right in that range. If we look at the IWM, that's up 6 pennies, so a flat trading session out here. We're not seeing conviction one way or the other. Probably the IWM is the one that actually gives us the most amount of conviction, or the strongest message, because this has got a really nice confirmed descending price channel out here, and price again today, right now as we speak, is bumping its head right up against that resistance level at the 116.26 area. So that's some resistance inside of the IWM if it can close above where it's trading right now, and it's 116.25. I don't mean 116.26. Let's just call it 116.93. If it can close above 116.93, that becomes fairly bullish out here inside of the IWM. Inside of the SPY, the SPY up 41 cents, 45 million shares here this morning. So you've already got some fairly decent volume for an hour of trading. In the case of the SPY, if I pull this back just a tad here, you can see it's descending price tops as well. In order to close above that, it needs to get above probably the 203.50 level. 203.50, that starts to become that. Then it has broken its slight descending price channel out here. That's in the SPY. Inside of Lucy in the sky with diamonds out here. What the diamonds are doing, which is kind of interesting for another day, in this could be third time is the charm, or couldn't be, but that's the December 16th high. That's 174.39 is the number. We've seen that level tested here the last 3 days with light volume. That had volume of 12.2 million shares. That was tested with 8.7 million shares, 7.2 yesterday. So far today, 2.7 million shares. Maybe we see a third test here with light volume. Getting above 175.54 would start to suggest some bullishness inside even the Dow diamonds. If we go take a look at some of the Dow 30 stocks out here. Let's go do that. Let's take a look. Obviously, start with IBM. So if we take a look at IBM right now, trading off with about 5 million shares to the downside, that is taking on a swing point that has volume of only 6.7 million shares. So the low of that is likely to be tested. That is 150.50. You're trading at 151.68. So far, the intra-session low has been 151.07. Has not been tested. Pretty good chance that it will. That's the leader in the clubhouse on the way down, percentage-wise and dollar-wise. You've also got McDonald's trading to the downside. MCD is the ticker symbol out here. That is off about 61 cents, about 0.7% down with 2.1 million shares. McDonald's is trading into its swing point from December 16th. That has got 15 million shares. You tested that yesterday with only 6.9 million shares. So far today, only 2 million shares to the downside. So you're inside that swing point with light volume out here, and that is inside of McDonald's. That's the number 2 dollar-wise to the downside. Well, I got Microsoft just stepped up its game. It's off 80 cents. Let's see what we got trading here to the outside. Dollar-wise, United Health Group, UNH is the ticker symbol. That's up about 2.5%. We've seen volume today of 2.1 million shares. She's at a new all-time high again out here. This stock chart here does not look, well, let me see if there's a longer-term chart or anything that maybe this is going to complete or is about to complete. See if we can find anything out here that's worth really identifying. And I'd have to say, nah, not really. I mean, there are some A to B equals CD patterns, but United Healthcare looks strong like a bull out there. You've also got Goldman Sachs trading to the upside, up about $1.90, up 1% out here. Now, Goldman Sachs, we know the financials have been struggling. Goldman Sachs right now trading at its weekly TAS market profile support level. I mean, really right at it. 177.47 is where price is trading. The bottom of the box is 177.69. So I'd say we're right there. Let's take this on a daily chart out here. Well, even on the weekly chart, what we know about the weekly chart was that week that began October 13th, that had volume of, that's a swing point on the weekly basis, 26 million shares, and price came down last week with only 18 million shares. You're trading inside that swing point, but you are doing it with light volume. Let's take a look at the daily chart, though. Daily chart shows volume today of 1.2 million shares. And if we were to close today, you'd have a bullish engulfing candle out here. And it looks like at the completion of an A to B equals CD to the downside. Let's take a look at that. Your A point on here, we'll go ahead and we'll use that December 29th as our A point. Our B point is January 6th low, and your C point out here on January the 9th. This has made a 1 to 1.272. A to B equals CD. You're getting a bullish reversal signal as we speak right now. On the daily basis, you are rejecting the October 16th swing. That had 7.7 million shares. You traded into it a couple days ago with 5 million shares and then 3 million shares yesterday. I don't think so. So you are seeing a reversal. Any close today above 171.26 and you're 177.47. Really, I'd have to say today any close above yesterday's open, which is 177.57, 7 pennies away from it right now. You got a bullish reversal signal out there inside of Goldman Sachs. So now that says, hey, let's go take a look at a couple of those sectors. Let's go take a look at the XLF. And see what it is doing. It's up 0.25% here this morning. It's not the leading sector inside the S&P 500, but all sectors are in the green as we speak at the moment. We do take a look at the XLF. It did form an A to B equals CD to the downside with that bullish engulfing candle here on Friday. So that already gave us a reversal signal as it made that price objective of 23.10. It actually got down to a price point of 23.06 out here. So the move higher inside of the financials could be underway. We'd want to take a look at what's going on with Berkshire Hathaway, JP Morgan, and the lot. I'm not going to do that here because we only have about a minute before our next before we go into the last breakout here. But let's go take a look at one of the other weak sectors. Let's go take a look at energy. That is leading the charge to the upside, up 1.5% as we speak here this morning. So inside of the energy sector, you're up so far today with 9 million shares. What we know is that the energy sector today is now finally finally clearing its swing point from December 16th that had 57 million shares. Price tested that with 52 million shares. That was back on January 14th. So you had a rejection of that low, of that swing point with lighter volume. And we've seen a sign of strength really off the bottom here. No, we haven't. This has been traveling in a significant descending price channel. Pretty good chance of what price is about to do right now. I'd say if price can clear 77.15, that's its TAS market profile resistance level, then you're likely to see price make a run all the way to the top of its descending price channel. And that's somewhere in the $81-ish type range. Just depends which day it gets up there. So as we speak right now, we've got the Dow. She's trading, what is she trading at? She is trading up 13 points. S&P up 8, Composite up 18. The bulls are back in town. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 53 points out here. The S&P is up 13. Composite's up 31. Russell's up 3.5. So our markets here just really following along the lines of following along the lines of, when I began the shows with you this morning, what we took a look at for our clues of the market was, hey, what are the markets doing worldwide out here? And we've taken a look at the correlation chart. I guess I didn't show it during this hour. Might as well go ahead and put that up on our screen out here. That's taking a look at this pattern right here. And that's where, in this case, we got the DAX at the top, you got the FTSE at the center, and you got the S&P at the bottom of our stock chart out here. And so you can see how correlated the markets are. The moves are typically they're not tick for tick or anything along those lines, but it helps us to get our head straight with regard to what's really going on in the market and just kind of tune out all of the other noise that is out there. And if we can do that, we can do ourselves a lot of justice out. That doesn't mean the trade's always going to work out, but it does help you to trade by just clearing your head. It's just kind of like doing a bit of yoga out there. Just simply always start with a clean palette. Start with a clean stock chart out there. And so what we do know today with regard to repeating patterns, as I mentioned, net advancing issues in the New York Stock Exchange. Look, Friday's move inside the market was really good. Really, from a New York Stock Exchange standpoint, which a lot of times people just simply overlook that. It was actually had really strong market breadth out there, and it's the New York Stock Exchange. Just to put it in perspective here, I'll show you this these charts out here. So you got three charts. You got the New York Stock Exchange on the left, composite on the in the center, the Dow on the right. New York Stock Exchange right now today, if you can see this, just this little green thing on the red line here in the center. Maybe I'll move this a little bit, move this down just a bit. And just look at the price oscillator. Price is above the zero line. New York Stock Exchange, the wider swath of the market, is the first one into bullish territory. First one, getting above zero. Now, I don't know how the day's going to close out. Shoot, the stuff could hit the fan in 30 seconds for all I know. But what I do know is if the market were to finish like this, the New York Stock Exchange just threw the switch on for long and strong out there. Can't control what happens tomorrow. Just use stops. Make sure you use wide enough stops, especially in volatile markets like the ones that we are in. If you don't know what I'm really referring to there, look, if you sign up for my newsletter service, Mastering Probability, you can test drive that for 30 days. So, you're really not on the hook for much. And in fact, you can get your money back out there. There's a 90-minute workshop, money management workshop, that is worth the price of admission out there. So, I take you through that whole scenario. So do yourself a favor, make sure that you understand position sizing, average true range, all that type of stuff. You want to do that. And don't forget, tomorrow at 4:15, I'm going to be doing a 1-hour workshop for the folks over at Ninja Trader. It's going to be on the lightning bolt pattern, the AB equals CD pattern, very similar to the workshop that I did not too long ago for the folks at eSignal. So it's a good overview. If you'd like to have a great overview of that tool, come on over to the homepage of TFNN.com. Under Breaking News, you'll see free webinar with Steve Rhodes. Click on that. That'll take you to the Ninja Trader website. You can sign up for that out there, and you can join me tomorrow at 4:15. Don't forget, Tom's got a workshop coming up tonight. You can test drive his newsletter service out there. I believe you can still do that from the homepage of TFNN.com. So stay tuned. This is Wonderful Wednesday. That means we've got a wonderful lineup for you. That includes Basil Chapman. He's up next. Larry Pesavento. After Larry, we've got Daryl Martin, David White, and then Tom O'Brien from 3 to 5. So have a great Wednesday, folks. Look forward to seeing you tomorrow. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.